Welcome, everyone, to Lunch and Learn. This is a show that we conceptualized a little while ago, and we did it one time and we didn't do it again. But the hope is that we start doing it more often. The premise of the show is very simple. It's Friday and it's lunchtime, and let's take that time to just have a little free-form session, talk about whatever it is the person hosting wants to talk about as it relates to markets and investing. Over the course of the week, we talk about a lot of the same concepts, but sometimes there's something that you just want to talk about, and we don't have time for it on our other shows, or it's not really the right fit. And the idea is that we would get every show would be hosted by someone different. It could be me, it could be JC, it could be Straza, it could be someone not with this, could be anybody, right? Could be one of you, maybe. And the idea is that we all have different perspectives on investing in the markets, and take a few minutes and talk about something that you want to share with the crowd. So people that have been watching me for a while know that my thing is ETFs. I think ETFs are the greatest financial innovation in the history of Wall Street. The vast majority of my invested money is in ETFs. All of it would be in ETFs if I had a choice. Not maybe almost all of it, but you don't always have a choice. If you have things like a 401k, for example, you may not have ETFs available to you in that. But I do a lot of ETF research, ETF investing, and that's sort of my thing. Just like JC's thing is charts, my thing is exchange traded funds. So that's what we'll talk about today. I just want to kind of show you guys how I do, just a cursory view on how I do my research and how I find ideas, right, for ETFs. Before I do that, though, if you don't know what an ETF is, exchange traded fund, that's what it stands for. It's basically a basket of stocks, right? It is a basket of stocks or any underlying asset. It could be a basket of commodities. It could be a basket of bonds. And you take all these assets and you put them in a basket, and then that basket trades on the stock exchange, just like a stock would, right? It trades all day. It's got prices going up and down all day, every day. Very similar to a mutual fund, but better for a few key reasons. Let's go over those reasons real fast. First reason ETFs are better than mutual funds. One, they are usually cheaper. Every fund comes with a fee, at least one fee. Some funds have, if they're crappy funds, they have multiple fees. But every fund has at least one fee. It's called the expense ratio. The expense ratios on ETFs are usually, not always, usually lower than they are for mutual funds. Some ETFs have expense ratios of like 0.03%, like 3 basis points, which is like ridiculously cheap. So like that'd be for every $1,000 of that ETF that you buy, you're paying a fee of $3, right? So that's like basically nothing. So the expense ratios are usually within the 0 to 1% range. It is unusual to see an ETF have an expense ratio of higher than 1%. So they're just more fee friendly than mutual funds. Mutual funds have other fees associated with them. The ETFs do not. Load fees, management fees, etc. ETFs don't have any of that stuff. So that's one reason. Another reason is ETFs are tax efficient. If you have ever invested in a mutual fund, you may know that due to the structure of the fund, and anytime somebody else sells their shares of your mutual fund, that's a taxable event to the fund. It gets passed down onto you. ETFs are not like that. If you and I own the same ETF and I sell mine, it has no bearing on you. It has no bearing on taxes that you pay whatsoever. So they're just very tax efficient in that way. Number 3 is that they are usually, keyword, they're usually transparent. There is a small corner of the ETF market that They're called non-transparent ETFs, but most ETFs are transparent. You can see their holdings updated every single day. You can see what exactly you're buying when you get them. And unlike mutual funds, they're liquid, right? If you've ever tried to buy or sell a mutual fund, you know that you can only buy or sell a mutual fund one time per day. That's at the close, at whatever price is that. That's your price. There's no price transparency. The fund is priced once a day, and that's your price. You want to get in, get out. That's the price. ETFs trade actively all day. If you want to be picky with your price, go for it. Have fun, right? The ETFs are liquid, and they trade actively throughout the day. So it's tax efficient, liquidity. And the biggest reason, they're diversified, right? That's why I like ETFs more than I like stocks. Stocks are fun. I own stocks because I think owning stocks is fun. But the reason most of my money is in ETFs is because they are diversified. You can own 500 stocks with one click of a button if you wanted to, right? You can own more than that. So ETFs are great for those reasons. Which ETFs are you in, Freda? Great question. I can get to that in a little bit. Before I get to that, though, I wanted to just show you very basic how you can do ETF research. And again, this is not meant to like promote any one company or any service. I'm not a shill. I'm not being paid by this company. I'm about to show you. I just use them. So this is a company. It's called Vetify. It used to be called ETF Database. So the website is etfdb.com. And they have a bunch of tools that I will show you now. And this is kind of how I find ideas for stuff. Like every week we have an analyst meeting here. And when I want to find ideas and things to talk about and things to pitch to the analyst team, this is usually where I start. So I go to tools up here and I go to ETF screener. Okay. And this is a very basic ETF screener. You can notice that I am signed out to start your free trial. So some of this stuff is going to be blocked out. You need a subscription. I signed out intentionally so that you can see what is available to anyone and not just to paying members. But I have paid for this on and off in the past when I've been varying levels of active in my accounts. But this is something that I think is worth paying for, and I do pay for it. But for right now, I signed out. Okay, so this is just a very basic screener. If you ever use a stock screener, you get it. It's the same idea. You can screen by all sorts of categories. You can screen by asset class. You can screen by certain attributes that you may want the fund to have. If you only want leveraged funds, I actually like to filter out leveraged funds because I'm looking at investing in funds, for a medium to long term. Definitely not for a day trade, and you don't want to hold leveraged or inverse funds for that long a period. So I will turn that off. I don't want to see any leverage, and I don't want to see any inverse funds in this screen. I will notice at the top here, see how it says there's 3,000 ETFs. There's a lot of ETFs out there, so it's a big universe. So you can filter by attribute. You can filter by brand if you know the issuer. You may not know that, which is totally fine. You can filter by things like expenses, or does it have a dividend, or what kind of returns does it have, or fund flows, or holdings. How many holdings does it have? You can get super specific. I'm not going to get specific right now. We're just going to leave it as is. The filter that I most commonly use is in the asset class category. I will just do equity. I will filter out, because usually when I want to see a commodity ETF, I will just do commodity and I'll filter out everything else. But usually I'm looking at equities. I'm looking at stocks, right? That's what I want to see. And you can get very specific here. You can do a filter by market cap within equity, right? Market cap, region, right? Where is the fund investing in? Is it investing in America? Is it investing in Europe or Asia or everywhere or any country that there is an ETF for? You can find it there. Sector is also valuable. Style is also valuable. For now, we're just going to do a straight up equity screen. I'm not going to filter by anything within equity. I just want to see equity. I want to see every equity ETF that is not leveraged or inverse. And that's what we have here on the screen right now. At the moment, the table is sorted by assets, AUM, assets under management. This isn't really that useful. It's just more so interesting to see what are the largest think of this as like the market cap, so to speak. It's like the market cap is to stocks what AUM is to ETFs. Just think of the size of the pie, so to speak. Not inherently useful, but just good to know. What I like to do, obviously, is start here. The next tab, returns. Obviously, it's the most fun thing to look at. Past performance does not equal future results, but it's fun to look at. And I want to know. I want to know what's working and what's not, right? So here we have different time horizons. I usually will start at the 1 week just to see if anything crazy is happening this weekend. This is why I filter out leveraged, right? Because if I had leveraged ETFs on here, this whole top of the table, it will always be leverage ETFs, because the best performing ETFs over any given week are always going to be using leverage, because that's the point of a leverage ETF, is to magnify short-term returns, but in the long term, you will lose. If you hold a leverage ETF for the long term, you will lose. They are not meant to be that. So anyway, so filtering out leverage ETFs, you can see what has worked the best this week, and this is why I start here, right? Just to see what's working. And you can almost always see a theme, right? So what jumps out to you here? Oh, a lot of banking ETFs, right? There's a regional bank ETF. There's a regional bank ETF. There's a community bank ETF, another bank. So, okay, so banks are strong. I could have seen that in any number of ways, right? I could have just looked at the indexes. But the reason I prefer to look at ETFs over indexes are great information, but that's all it is information. You can't invest in an index. You can invest in an ETF. So this is like sort of one step further. This is actually giving me investable options, right? You want to invest in regional banks. Here's 4 or 5 options right here. Okay, just from this week. So anyway, scrolling down, and this just gives me an idea of what's working and what's not. And I just like to have an idea. Right. So, the Procure Space ETF. That's interesting to see that up. Anyway, this is just 1 week. Those are the gainers. What about the losers? You got to scroll down here because there's always new issuers and they haven't been around for that long. So we got to scroll down past all the new issuers. What has not worked this week? Ignore the Russia ETF. That thing is not really trading right now. So we can just write that off. Okay. What's not working this week? Cannabis is not working this week. Crypto is not working this week. That's pretty much it. Crypto and cannabis are both not working this week. Chinese internet not working this week. Okay, good to know. Let's move on to 1 month. Let's move on to 1 month and see just what's working and what's not. Well, no surprise there. If you're watching the show, you know that crypto stocks have been hot. So while they've cooled off significantly in the last week, it's only because they've been on fire for the last month. And again, I use this for personal use and for work to find ideas for, to pitch to the guys and to find ideas for myself, right? When I want to go and do some buying, or when I want to reallocate some capital. At any given time, I try to have some dry powder, maybe 10% at the ready, so I can do some more buying, right? So again, no surprise here. Lots of crypto-related ETFs on the top of the filters for the last month. And if you're thinking, how do I know the difference? There's so many. Well, we'll get to that in a second. So crypto, what jumps out here? EVs. There's an EV and then oil and gas. And here it comes, right? 1, 2, 3, 4, 5. 5 oil and gas ETFs up almost 20% in the last month. Let me give you an idea there. What else? Airlines. That's leverage. That shouldn't be in here. Let's filter that out. We can filter that out by going to attributes. Am I in attributes? I'm in asset class. Let's go to attributes and Let's filter out the oh no, the structure. Let's just do ETFs, not ETNs. ETNs are a different thing. I don't want to get into that right now. So okay, just ETFs. 1 month, year to date is always interesting as long as it's not like January 3rd. Like knowing what's up, what's down. Again, we see a lot of crypto on the upside, and on the downside, we see a lot of cannabis. And every so often, I'll just skip right to the 5-year, right? And this is interesting. Okay, so let's look at a 5-year performance here of ETFs. Now, something I want to say about this. Obviously, you can see that 3 of the best performing ETFs in the last 5 years are semiconductor ETFs: SMH, XSD, and SOXX. There is something called a sequence of return risk. If you bought each of these ETFs 5 years ago, and you held them all the entire time to today, you would have done well. But within those 5 years, there were massive periods of both outperformance and underperformance. If we look year to date right now, the 3 funds that I just showed you, the SMH, the XSD, and the SOXX, are crushing it. Okay, just crushing it. We may have to scroll down a little bit, but there we go. SOXX is up 46% this year. SMH is up 50% this year. So when that happens, it's going to have almost a disproportionate effect because it's the most recent period of time. So, this 5-year return table would have looked a lot different 6 months ago, 7 months ago, before these things rallied 40, 50%. So just know that. That's why I like looking at the short term and the long term, because the long term does not tell the whole story, right? If you've had an amazing 6 months, it may make you think that's been an amazing 5 years, and these funds have had a good 5 years, but it hasn't always been pretty. So just please look at multiple time horizons. Do not just look at the long term. Do not just look at the short term. Okay. Screener. So back to that. I mostly use this for looking at returns. I will sometimes use it to look at expense ratios, if I have a few in mind. And here you see flows. We'll actually get to flows. Flows is paywalled on this site, but there's another site you can use if you want to look at fund flows. I'll explain what those are. So returns. Okay, that's mostly what I use this for. If you don't know what you want to look for, or maybe if you want to look for a fund in a specific country, like that's all you know is okay, I want to look for like a fund that invests in, let's just say, Europe. Okay, there's another tool up here. Okay, it's called the country exposure tool, and we'll go there right now. This is pretty nifty. Okay, you can just click on a country, and it will bring up a list of every single ETF that has exposure to that country. So let's go to Europe, and let's just go to the UK. Okay, there's 930 ETFs with exposure to the UK, and then we can just click here, and we can see which funds have the largest weighting to the UK. And here is every single fund with UK exposure, down from the one with the most exposure to the one with the least exposure, right? These are like 0.0001%, right? So that's a cool tool if you know what country you're looking for. If you know, what, I definitely want some more global exposure, right? Maybe I want some more China exposure, right? Or you know what? If you're Steve Straza and you're overseas in Vietnam right now, where's Vietnam? Can I get on this map here? I don't know if I can. I'll just search for Vietnam. He just came back, or he was in Vietnam last week, and he loved Vietnam. And he's thinking, oh man, how do I invest in Vietnam? I'm so bullish Vietnam right now. How do I invest in Vietnam? All right, let's go this way. There are 2 ETFs with a direct Vietnam exposure, VNM and VNAM. Okay, so there you go. That's just one example. So if you know the country, I definitely that you want to invest in, I definitely would use this tool. Okay, it's pretty easy. Let's do Brazil, right? There's a lot of Brazilian ETFs, and obviously they differ, right? This is just the first question you have to ask: is what country? Let's say you don't even know the country. Okay, let's say you don't necessarily care about the country. Let's say you care about the stock, right? Like, let's say you just want to know what ETFs hold the most Apple. All right. Another tool here. It's called the stock exposure tool. You go there. Here's Apple. We'll click on that. This is every ETF that owns Apple, sorted by how much Apple they hold or how much of the portfolio is allocated to Apple. So XLK and FTEC have 22% of their funds allocated to just Apple. So you know that on days that Apple goes up, XLK and FTEC are going up with it, right? And on days that Apple goes down, these funds are probably going down too, unless every other fund or every other stock in the basket is going the other direction to counteract that weight. But this one stock, Apple, accounts for such a large portion of these portfolios that they're probably going to be very correlated. So you could say, I want to own Apple, but I want to own Apple with some other things, right? So you just know that you want to own stocks like Apple, right? Because ETFs are going to own stocks that share a common characteristic, right? And so you could say, I like Apple. Maybe I already own Apple. I just want to own a bunch of things like Apple. What are some of Apple's peers, or what are some stocks that sort of live in the same universe as Apple? Here you go. We're looking at mega cap growth, technology, those sort of categories, right? And you can do this for any stock, not just Apple. You can do it for, I don't know, Kraft Heinz. You want to see how many ETFs hold ketchup? There you go, right? Obviously, far fewer. Kraft Heinz is not a very popular stock. But look, consumer staples. All right, food and beverage, dividend, right? So an easy way to find funds based on the stock that stocks that they're exposed to. You can also use this to trade, right? Like, again, going back to the Apple example, it may be helpful to know if Apple reports earnings next week, right? So it's going to be volatile. So if or maybe in 2 weeks, I don't even know. So if Apple, is gapping up 5%, 10%, XLK is going to go with it, right? So just helpful to know. So I use the country tool when I have an idea about the country. I use the stock exposure tool when I have an idea about the stock or the type of stock that I want to own. And I use the screener to find, just to see what's been the best and worst performer. Because at the end of the day, that's all that matters, right? Is performance. Is return is almost all that matters. So the last thing that I use, actually two more things, is this head-to-head comparison tool. So this is, again, in that tool menu. You can go click on head-to-head ETF comparison tool. Let's go back here. This is a tool that you can use to compare ETFs with each other. Okay. Obviously, there are 3,000 different ETFs, but not 3,000 different investing strategies. There are many ETFs that have similar names, and it sounds like they do the same thing, and maybe they do, right? But everyone is a little bit different. I like to say you got to read the ingredients, okay? Like, really read the ingredients. You can't just say, oh, the ETF is called the future of transportation ETF. It must hold it must hold Tesla. And you don't assume that. You don't know. You got to look. You got to look at the ingredients. You got to look under the hood. So, let's do this. Let's look at two popular cybersecurity ETFs. They both invest in cybersecurity, but they do it in different ways. So Hack and CIBR, and we'll just compare the two, right? And we'll just see how are they different. Well, first off, one's cheaper, right? Not by that much, but you can see Hack has a lower fee, a lower expense ratio than Cyber. Okay, that's interesting. The AUM just kind of tells you how popular it is. Now, for a long time, Hack was more popular, and only in the last couple of years has CIBR overtaken it in terms of popularity. That just gives you an idea of which fund, again, is more popular, right? If you scroll up and you look at holdings, this is really what matters, right? Is what does the fund invest in? So you can see Hack has 56 holdings compared to Cyber's 36. So Hack is invested in more stuff. That's not necessarily a good thing or a bad thing. It's just a thing. It's just a way that the funds are different. And you can see the top holdings and see how they're not the same, even though they might appear, they're definitely similar, right? Look, Palo Alto, number 2 on CIBR, Palo Alto, number 4 on Hack, right? Zscaler, number 1 on Hack, and number whatever that is, 7 on Cyber, right? So it is a lot of the same stocks, but you can just see how they're constructed in different ways, right? And this will tell you, at least should tell you, what you want to own, because you should have an idea of you know of what you want to buy. Do you want to buy, like, do you know these names? If you already have some idea, then you have an idea of which of these you like. If you don't have an idea, then go to the next tab. Performance. When in doubt, look at past performance, right? And yeah, they're going to be similar, but different, again, because they're built in different ways, right? So you can see the returns, 3-year return, Cyber is crushing Hack. The 1-year return, Cyber is better. The year-to-date return, Cyber is better, right? The 1-month return, that's not, I mean, it's better, but it's flat, right? So based on past performance, Cyber would appear to be the better play. That, again, is not a guarantee of future returns, so we don't actually know which will do better. All we can do is sort of look at the past and help us inform the future. You can look at the dividend. You can look at the beta, the volatility. Those are very similar. Not a lot there. Dividend, I mean, I don't think anyone's buying cybersecurity stocks for their dividends, so maybe this isn't the best example for that, right? And so that's basically how I would look at it, right? I would look at, if I'm comparing two. Let's do another comparison, okay? Man, I thought this was going to take 10 minutes. It's going on a half hour so far. Let's do. Someone give me an idea of what we should compare, not cybersecurity. Well, let's do. I'm thinking we could do the two largest, SPY versus IVV. Well, let's do this one. Let's do emerging markets. Let's do EEM versus VWO. Okay, these are two of the largest broad-based emerging markets ETFs. Okay, obviously one of them is much larger than the other, right? EEM has 24 billion AUM and VWO has 74 billion AUM. Okay, 24 billion is still a shit ton of money. So that's interesting. Let's go to the holdings and let's see how they differ. Okay. Whoa, look at that, guys. VWO has like 4 times the holdings as EEM. So super diversified. Okay. Super diversified. Definitely some similarities over at the top of their portfolios, right? Taiwan Semi, Tencent, Alibaba, Reliance, right? But you can see just how the weightings differ, and that will, of course, impact performance, right? So if you got a performance, and yeah, no surprise to see a divergence, even though they portend and they essentially do the same thing. These funds function in the same way. They give you the same, more or less the same exposure, broadly speaking, but they do it in different ways, right? And so I'm not here to tell you which one is better. Better is subjective. Okay. It's just an opinion. It's not about what's better. It's about what's better for you. Right. So again, past performance, holdings. Did we look at the expense ratio? Oh, look at the expense ratio. Now, see, that's interesting. Vanguard is known for being extremely cheap. They have very low fees. 8 basis points versus 68 basis points. Okay. So the EEM is essentially 8 times, has a fee 8 times greater than the VWO. That's substantial to me. So I would also, I would consider, in this case, if there's a large spread in the fees, I would consider that as well. Okay, so the last thing I wanted to do, and then I see a couple questions in the chat, is look at fund flows. I do this more so for my own entertainment. Fund flows themselves aren't inherently indicative of bullishness or bearishness. It's just an indicative of trader behavior at the moment. So I already pulled this up, actually. Maybe I should start from scratch on the fund flow tool. So this is a different website. This is ETF.com. Okay. So ETF.com, you go to tools. Actually, maybe I'll back up and I'll navigate here for you. So ETF.com, tools, ETF fund flows. Okay. And again, so far, everything I showed you on this video is free. That's kind of the idea. The problem with this is the problem with free is if you paid for this, you would have a table. You'd be able to see a ranking of the inflows and outflows. But because we're not doing that, you have to be able to search by tickers. You have to know what you're looking for. Fund flows essentially tell you how much money is flowing into and out of the fund. Because of the structure of ETFs, if 10 million people decide to sell the same fund on the same day, that in theory should not have an impact on the price of the ETF because the price is tied to the underlying stocks within that ETF basket, right? And there are people whose only job it is to keep the price of the fund in line with the price of all the underlying stocks within that fund. So buyers, because we always say when stocks go up, there's the joke, why is the stock up? More buyers than sellers. Why is the stock down? More sellers than buyers, right? Buyers drive prices up, sellers drive prices down. That is not true with ETFs because of the way the fund is structured, okay? So we look at fund flows not because they impact price, but because it's nice to know sometimes if there's a lot of money flowing into a fund, it tells you people want to buy that fund. And if there's money flowing out, it means they don't want to own that fund. Not always correlated. In fact, sometimes inversely correlated with price, right? You see this with ARK. So there's a reason I'm bringing ARKK up on the screen. And let's just look at the last, let's look at the last year. Let's go July of last year to July of this year. And we'll do a weekly search of fund flows for ARKK. And you can see. Okay. Oh, wait. That's not right. Can we do a year ago? Can we do that? Update July 20 or June 22. Does that work? Let's see. There we go. Okay. So in the last 13 months, $448 million has left this one ETF, ARKK. So if you again think of it like the equivalent, the AUM is to an ETF, what the market cap is to a stock. This fund is basically $450 million smaller in the size of the pie than it was last June. Again, that's not necessarily an indicator of performance, because if you've been following, you know that ARKK is actually having a very good, at least the last 7 months, right? I think it's probably flat from last summer, maybe flat to down. Um, it's definitely up this year, right? Um, so not necessarily an indicator of performance, just an indicator of, do the investors, do people want to buy it, or do they want to sell it? A lot of people bought ARKK in like January 2000 and well, it was January 01, right? Around the top. This thing was going parabolic. A lot of people came in to this fund at the end of the rally, and they rode it all the way down. But it can be helpful to know, just is this fund popular? Is it hot in terms of demand, or is it cold in terms of demand? And I like to know. So, okay. I think those are, I think that's a good place to end it. I've been on for like, I don't know, half hour already, maybe more. Let's do some questions from the chat. Okay. What ETFs am I in? Great question. So I did some much needed, you could argue, portfolio maintenance at the end of last year. I had a whole bunch of, I had a couple of winners that I had sold, and I had like way more losers that I had held on to. So I did some tax loss harvesting, and I got rid of a bunch of stuff in my portfolio at the end of last year. So if I pull it up right now, whoops, just so I want to make sure I'm not lying to you. I don't want to lie to you. In my main taxable account, okay, my main taxable account, because like I said, if you have a 401k, those are notorious for not giving you many options. As great as they are, I have a couple of 401ks where I'm not allowed to invest in ETFs, right? So I have mutual funds, as much of a bummer as that is. So in my main taxable portfolio, my largest holdings, half of the portfolio is VOO. Okay, VOO. That's the S&P, that's the Vanguard S&P 500 ETF. Okay, that is half my portfolio. It's about 52%. The second largest fund that I own is 15% of my portfolio, and that is VEU. Okay, that's the Vanguard International. It's the whole world except for the US, right? So I got VOO, which is just US. I got VEU, which is everything but the US. And those two funds combined are about 68%. So about 2/3 my portfolio right there. Okay. And those are, by the way, that's the core. That's what I'm never selling. All right. Like when I say I'm never selling Disney is like 3%. It was 5%. Now it's like 3% of my portfolio. But I'm definitely never selling VOO or VEU. They're 2/3 of this thing. And they're gonna, maybe I'll do some rebalancing. At one point, I think VEU, when I bought it, I think I allocated 20%. I think it's gone down a little bit. But that's the core. I'm never selling those. And the idea is the final third of my portfolio, that's where I can have some fun. That's where I can do some rotating, right? So at the moment, I own a couple stocks, very small pieces. I own Disney. I own Berkshire Hathaway. Those are the only two stocks I own in this portfolio. I have a lot of cash. I'll be honest with you guys. I have a lot of dry powder. That's actually one of the reasons I'm doing this, is because I've been sitting on, I sold a bunch of stuff at the end of the year, sold a lot of things I was underwater in, and raised a bunch of cash. Arguably, that was wrong of me to do because we've had a great year in most of the market. And I never really redeployed that cash. So that's kind of why I was doing this exercise the other week, and I thought I can just do this, on a stream. So here I am. So I'm in need of redeploying that cash. I have a couple other small ETFs that are very small weightings in this portfolio. I do own the CIBR ETF. There was a uh, real like a real estate one that I just recently sold it. SRVR. It's like a data center rate ETF. I just sold that. And there are a couple other ones that don't make up a very large part of the account at all. But I have about 15% of the portfolio in cash right now. Okay. So I'm in need of deploying said cash. And that's why I'm doing this is to find ideas. So I'll let you know when I buy, but I haven't. Okay. Have you gone over Jeppy in the past? That is a very interesting ETF. Okay. Um, yeah. So Jeppy, what is it? It sells calls. Is that what is this is an income generating fund, right? So Jeppy, looking at the performance of Jeppy is like not really going to help you because, and again, this is where it can get complicated, and this is sort of the other side of the ETF coin is there are some ETFs that do some very complicated financial engineering, and this is sort of one of them, right? Um, First off, the fund is only 3 years old. It was launched in May of 2020. It's basically this is income generating. So what they do is, yeah, they hold a bunch of stocks, but they sell options on them, right? So I haven't looked enough into this to have a really strong opinion. I would just caution that like funds that like once you get into leverage or funds that do like an option strategy, um, it it's a different set of questions you want to ask yourself, right? You want to ask yourself, does this fund actually do what it says? Um, it's not tracking an index, so you have really nothing to compare it to, unfortunately. Which is another thing that I didn't really get into is tracking error. Most ETFs have a very low tracking error because they're passive, but so there's no benchmark to compare it to. If it actually generates income that it says it does, then great. If you have room for that in your portfolio, then great. I don't own any complicated, nor have I ever owned any complicated options based ETFs like this. I do know though that I'm pretty sure the flows in this thing have been pretty heavy. If we go back to the fund flow tool, let's just look at Jeppy because I see this one brought up every so often on social media. So let's do Jeppy and let's go to the last year. Let's just look at July 20th or whatever of last year. Okay. I want it. Okay. Submit. Oh, God damn it. Okay. See if that works. Oh, I did daily. Oh, well. It's going to be a bit of a mess. Wow. That's a lot of inflows, man. Holy crap. $17 billion? That's why I see it mentioned a lot. Yeah, all right. It's popular. All right. I mean that tells you something right there, right? Tells you it's popular. Okay. Um I haven't spent enough time on this to really understand it. Beyond what I just told you. But hey, if it generates income, then if it does what it says, then yeah, I got nothing against it, right? Um, I mean that right there. That's why you're owning this. 10.5% dividend yield. That's why you're owning this. It's for income. Okay. Yeah. I mean, what you want to do is you want to compare JEPI to other high income generating ETFs. So any dividend ETFs that are out there, or dividend stocks for that matter, that's what you want to compare this to. Okay. What else? Where's the lunch? I mean, I don't want to eat lunch on the show, so I save that for later. That's basically it. Gosh, I went a lot longer than I thought I would. I thought I was going to go for like 10 minutes. I went for like almost an hour. All right. I'm gonna wrap it up, guys. I'm done. It is Friday afternoon after all. So should I have done that? Let me bring my screen back up. So I don't know if I messed up the screen there. Sorry about that. Okay. We're done, I think. So thanks for watching, everyone. Any questions, comments, concerns, you can always email us questions@stockmarketmedia.com if you have a specific request for a topic for Lunch and Learn. Again, this is a very free-flowing show. There's not really a agenda or a plan, so to speak. If there's something you want to learn about, email us and let us know, and we can try to do one of these. The goal is every Friday. That's the goal. So maybe tune in for next week. I don't know. We'll find out. All right, that'll be a wrap. This is a wrap on not only this show, this is also a wrap on our programming for the week. Only other thing we have going on is a trend lines over headlines show, which usually gets posted a couple hours from now on Stock Market TV. Thanks for watching, everyone. Smash the like. Have a great weekend. I will see you all on Monday.